Assumable loans. Is this your golden opportunity to get a 3% interest rate again? Let's talk about the pros and cons. Hey everyone, thanks for joining us. We're the Hatch Homes Group and it is our Monday housing market update. Today you have Johnny and Angela from the team. So have you seen people advertising their low interest rate assumable loans? Like you could take on their loan. Sounds very enticing. So we have clients that ask us this question all the time, so we thought it'd be really helpful to talk it through. But first, Johnny, what is an assumable loan?
So an assumable loan is basically a mortgage type financing product where it's an arrangement where the outstanding mortgage balance and its terms are transferred to a new buyer. You're effectively swapping out one borrower's name on a mortgage for another. You can kind of think of it like a sublease for a mortgage. There's different types of loans that can qualify to be assumable. So let's kind of go over which ones those are.
Yeah, so we have a really common one we see a lot is VA, so Veterans Affairs Financing. We have USDA, not as common, and then FHA, which is another common one. They all seem to be low down payment loans for the most part. You cannot do conventional. You cannot assume a conventional loan.
So that sounds great, and a lot of buyers would love to get a 4% interest rate, but there could be some hiccups or could be some things that get in the way of that or make it a challenge.
So let's go over some pros and cons.
Yep. So a pro could be that the mortgage rate is lower than the current mortgages being offered right now. And you wouldn't necessarily need to qualify for it at today's interest rate. You would need to qualify for it at what the borrower currently has. And it could have lower upfront costs to do that part. And the other pro is it is a good marketing piece for sellers to be able to advertise that in their property. If the seller's home equity is low, it could be lower upfront costs for the buyer.
Okay, so let's talk about some cons. A lot of people see, okay, great, it's, I could just assume their loan, that's awesome. But you're assuming their loan how it is. So let's say it's $500,000 and the loan on it is for $300,000. There's a $200,000 gap that you have to cover. So most likely you would want to have $200,000 to bring to the table to cover that so that you can actually assume the loan. Now there is an option to be able to get a second loan for that gap, but there's some serious cons with those, so it doesn't really fit for everyone. I believe it's like a variable, it's a second variable rate loan, so it's just the numbers are not going to fully make sense. Another con, you don't get to choose your lender if you're doing a straight up assumable. You're going through the servicer that the loan is already through. Now, to piggyback on that con in particular is that those servicers are not making money off of this transaction. So just assuming the loan, pretty low priority for that servicer. And we recently had someone on our team that went through the whole VA assumable loan process and couldn't reach the servicer. They say it takes about, expect 30 to 60 days.
60 to 90 days.
60 to 90 days
Yeah.
to actually go through the process. Whereas that one took 6 months because it just was not a priority for that servicer.
Right.
That's a huge con. I mean, most people can't wait that long to get into a property.
Yeah.
And then you're also having holding costs of like, where are you living during that 6 months while you're waiting for it?
Right. And another con would be is if you're selling your home through an assumable mortgage, you can't close on your replacement property until this one's, done with.
Yeah, I mean, that definitely makes it a little more tricky for people that are trying to do this.
Bottom line is it's easier said than done. It's not going to work for everyone, but it could be your one chance to get an interest rate that's likely never coming back.
Yeah, that's huge. So thank you for watching. Remember to like and subscribe and comment below if you have any questions.